Hi, my name is Nick. I'm the founder of Lions Den Market Solutions. I would like to thank everybody for subscribing to the YouTube channel, liking the Instagram page, and being a member of the Lions Den Market Solutions Facebook group, where it's a peer-to-peer interaction on really how to come up with a daily strategy on how to trade stocks and options per day, so we can really get ahead on the market and beat it. I was gonna put this Facebook page off until Sunday and try to have it loaded with content beforehand on reading graphs, what candlestick charts are, how to come up with strategies, what options are, how to read Greeks, and a bunch of other minor details that can really give new investors a jump when making that decision to become a trader in the market. But we are coming into earnings season, and I figured why put it off any longer? Earnings season is a great time to make some serious profits if you are on the right side of the trade. With that being said, let's just jump into what earnings season really is and what people mean when they talk about earnings reports in the stock market. There are three major things that investors are looking for when they talk about earnings reports and what they want to see their company doing if they're investing in. The one thing that you're going to hear a lot is EPS. What is the company's EPS, forecasted EPS, and did it hit that forecasted EPS? The EPS is earnings per share. And how you get that number is you take how much money your company made divided by the amount of shares open to the public, and then that number is going to give you your EPS, or earnings per share. The second thing that investors want to see is good revenue or revenue growth. How much money did my company make that I'm investing in? What's the revenue? They want to have a good revenue, and they want it to be at or above the expected revenue that was forecasted for their company that they're investing in. And then the last and most important thing that they want to see is future outlook. If future outlook doesn't look good, why would I stay invested in a stock if it's not going to go downwards? If the company's in a downward spiral or moving in a downward direction, you're going to want to get their money out, which is going to cause the market to drop in that specific stock or sector. We can use a great example today for Netflix. Netflix has had an expected earnings per share today of 53 cents per share. That's what the experts and analysts were expecting out of Netflix. Netflix actually had an earnings per share today in the aftermarket when they gave it of $1.30. It beat that earnings per share by over 100%. An excellent earnings per share to deliver to investors. And on that news, the stock did go up at first. It also had a revenue of 5.45 billion, and Netflix beat that as well. I believe they hit 5.6 or 5.7 billion in revenue. So they also beat that forecast as well. But then Netflix did start to decline and went into a negative after hours trading. And that is because the future forecast for Netflix did not look so good. The forecast for Netflix coming into the future is going to show less subscribers, and that is probably due to the competition with companies such as Disney Plus, Apple TV, Amazon, and HBO, and the other companies that are bringing streaming services to the web now. With that being said, you could take that information into this earnings season and you can apply it to companies like Apple or Tesla, who's coming out on January 31st. I made my first big profit in the market off of Tesla. Tesla was expected to give a terrible earnings report 3 months ago. I did research into options and saw that people were buying tons of options expecting Tesla to go up. I took that as possibly insider trading, and I decided I would follow the smart money, and I bought a call option on Tesla betting it would go up when most were expecting it to go down. When the market closed that night, Tesla jumped up $52, and I sold the $560 option for $3,000 the following day. Given I did have several of them, so I made a substantial profit that morning, and that was my first big win in the market. So playing the earnings reports can be extremely profitable with profits far above 100, 2, 3, 400% on a single option if you are on the right side of the trade. You can also play the equities market and still make a substantial profit if you do your homework and you're on the right side of the trade once again. Again, this is a brand new Facebook page. I'm going to be uploading content on this page on everything from scanning for stocks to how to identify market trends and patterns. So I hope that you stay tuned, and I will be uploading very shortly. Once again, I'd like to thank you very much for tuning in to Lions Den Market Solutions. This is Nick. Happy trading.